What's up, everybody? It's Value Unlocked. I'm Ryan Grace here with the one and only Mad Mike. And if you're not familiar with what we're doing, this is Tasty Crypto. This is our YouTube channel, new content that we're putting out. Yes, we are part of the Tasty family, the brains behind Tasty Trade, Tasty Live, and now Tasty Crypto. Coming at you, trying to unlock a little bit of value. Mike, how you doing?
I'm doing great, Ryan. How are you?
Pretty good, man. We got a little bit of the Halloween spirit in the air here as we record on October 26th on a Thursday. We got a costume contest today. I see you dressed up for it.
You know, I think I'm going to add a picture of our pumpkin carving from yesterday. I sent that picture to a couple people. Somebody thought a 4-year-old did it. Another person said, "Did you not have tools? Did you do it with your hands?" So I'm going to include a shot of that. I'd like to hear people's opinions on our art. I think it's art.
That's the best way to classify it. Hand carved. Yeah, no tools necessary here. It is. Yeah. It is an abstract pumpkin carving. That's right. But
yeah, the people here won't get that though. They won't get it.
No, that's okay. We'll get them next time. So what do you want to talk about today?
I want to talk about decentralized finance. I want to talk about cryptocurrency, and I want to talk about Tasty Crypto. If somebody wants exposure to cryptocurrency, they can simply open an account at Tasty Trade. So we are Tasty Crypto. Ryan, what's the difference between Tasty Crypto and Tasty Trade? What can you do in Tasty Crypto that you can't do in Tasty Trade?
Yeah, with Tasty Crypto, what we're trying to do and the offering, the product really complements the offering at the Tasty Trade brokerage. But what we're trying to do here is provide access to on-chain opportunities. And that's what we mean by DeFi, right? There's all these things that you can do. Let's say games you can play in a sense in traditional finance. You can trade futures, options, you can buy stock, a lot of different strategies that you can use. Well, there's all of these other things that you can do. And some of them are similar, very similar actually, but they're on-chain. They're decentralized. I don't know if that's the best word for it. I think of it more as on-chain finance, on-chain opportunities, but that's what Tasty Crypto is. An application that gives you access to all of these ways to speculate, to participate, to trade, all on-chain. It's on the Ethereum network right now. You do have the ability to create a wallet address for Bitcoin, but in terms of where the DeFi applications are, the decentralized applications are, that's on Ethereum. That's what we give you access to in Tasty Crypto. And there's a lot that you can do.
So all those activities that you've mentioned, I can already do in traditional finance, right? So why would I take the added risk of going into decentralized finance? What are some advantages? What's the alpha of decentralized finance when compared to the traditional financial sector?
Because of the yields, because of the money that you can potentially make. Why would you sell a call option against your stock? Why would you use this strategy? Why would you trade futures? Well, because at the end of the day, you're trying to make some money. And there are a lot of ways that you can potentially do that in DeFi that we give you access to that we'll talk about here. But that's really what it is, right? Mostly financial use cases.
I remember, Ryan, I was at a bar with you maybe 3 years ago. And I'd never heard of decentralized finance. I'd heard of Bitcoin. I'd heard of Ethereum. I'd owned a little of both, but I didn't know what any of this stuff meant. I just knew that it was likely going to go up in value, and it did go up in value, and that's great. But what was the utility? So you showed me something called a liquidity pool. And at the time, I didn't understand it. I had a vague idea of what a liquidity pool was. And that was my first real lesson on decentralized finance about what this stuff actually is. And 3 years later, it's my career. I work in decentralized finance from this origin, it's my genesis in DeFi. And what I found fascinating about it, what I still find fascinating about it, is when we talk market makers in traditional finance, we talk Virtu, we talk Citadel, an elite group of people. You have to pay to play, right? Huge barriers to entry. Not everybody can become a market maker. You have to have a lot of money, a lot of liquidity to be in that game. And only a handful of people in the country can do that. Yeah, a lot of expertise. You have to know what you're doing, right? But with liquidity pools, with automated market maker technology, anybody can become a liquidity provider. And I know, Ryan, you just told me today in conversation that I think over the last couple of days from a relatively small account that you have it with a Uniswap liquidity pool, you were able to make, was it 150? I think it was 1.5% return we figured out in 2 days, right?
Yeah, I can jump into that in just a second. Been grinding it out in a pool here recently, and it provided liquidity to Uniswap, and that's the decentralized exchange. We can talk about how that works. But to your point, we were talking about this a couple of years ago, a year ago, whenever it was at the bar. I've been doing this for a long time. One of the things that I think when I came across it in I don't know, it must have been a couple of years ago, but when I first came across this, it was where all of a sudden I was like, oh wow, this is cool. Now I kind of get it. I'd heard about DeFi before, and I think this happens with a lot of people, whether it's with NFTs or just going on chain in general. You hear some different things, you're certainly aware that this is happening, and then you finally participate in some way. You use an app, you have some on-chain experience, and you kind of get this appetite for it where it's like, all right, what else is there? This is cool. I kind of understand how this works. And don't get me wrong, made a lot of mistakes. There is risk that you're taking on naturally, but that was my gateway drug to DeFi. Decentralized exchange, that whole concept just blew my mind. Automated market makers, liquidity pools. Happy to jump into that and kind of show you what I've been doing. But that to me was one of the most compelling use cases of DeFi, still is, and it's real. This is real, in my opinion. This is game changing, and this will have, there's going to be repercussions on the financial industry, I think, over the next decade as a result of this technology. Positive changes for sure, but this was my DeFi gateway drug.
Yeah, and the efficiency of decentralized finance, it's hard to ignore. Whenever I think of DeFi, it always comes back to efficiency in my mind, because business tends to gravitate towards the most efficient route. And what is more efficient than something like a liquidity pool where anybody in the world can participate in it, right?
Yeah, I think when you have tokens
yes.
and you need to create liquidity around the exchange of those tokens, whatever that token might be, I want to swap it for something else, I want to swap it for a stable coin. This is an efficient mechanism for that process. I don't think this is perfect. I don't think it's better than, say, trading futures on a listed exchange or options on a listed exchange. With Uniswap right now, there's no limit order. You have a single price, you want to swap something, there's liquidity to be able to do that, exchange it from one token to another. This allows you to do that simply by connecting your wallet. It's permissionless. Pretty decentralized, I think, is probably the best way to put it. But anybody can go to this. And what I think is really cool about it is that there's multiple ways that you can participate. We're talking right now about just swapping tokens and trading on chain. But the way that this functions is through other individuals, institutions, entities, whatever, just other participants providing liquidity to facilitate that exchange. And so as an individual, what's really cool about this, and we'll jump into it in a second, is you're almost able to run your own brokerage firm on the blockchain and like 24/7, right? Instead of those fees going to a central kind of broker, centralized broker, say a tastytrade, for example, or somebody else in the industry, when you're providing liquidity to a decentralized exchange and you're acting in that capacity, you receive the fees as if you were the brokerage. So there's a commission that's charged when someone goes to swap through the protocol, and then a portion of that commission, that fee, whatever you want to call it, it goes to you. And that's where you generate these yields, as you had mentioned, 1%, 1.5%. Sometimes you grind it out and you don't make very much. And there's risk in doing this too. But sometimes you can make a lot of money very quickly. And it's in a much more passive way where you're running this pool, you're monitoring it, but you're just collecting fees for providing liquidity. Really cool, in my opinion.
Yeah. So sort of like a high level view of this, and correct me if I'm wrong. So let's say you own two cryptocurrencies. Let's say that you have Ethereum, Ether, and you have USDC, US dollar stablecoin. So you could take these two cryptocurrencies, if you own them, connect your wallet to Uniswap, and join a pool that would match up with your cryptocurrencies. So you would join the ETH USDC pool, which I think, is that the one that you're partaking in right now?
Yeah, that's what I'm in. Where I spend most of my time is in ETH USDC. So it's just pretty much Ethereum on one side and then USDC stablecoin on the other side. So it's ETH priced in dollars compared to ETH priced in Bitcoin or wrapped Bitcoin or ETH priced in some other token. This is where most of the volume and the activity still is today. And that's where I prefer to play.
Okay, so I mentioned liquidity pools because that seems to be one of the more lucrative activities that you can do in decentralized finance. And I just kind of want to run through the mechanics of this and how it works. And we're going to pop an image up here where you can see at the top left here, automated market maker formula. X times Y equals K, right? So the two values of your cryptocurrency is the Ethereum and the US dollar stablecoin. If you put $2,000 in, you're always going to be able to take $2,000 out. However, as people buy from Ether, because essentially what you're doing is you're creating a pool, and from this pool that has Ether and USDC in it, people tap it. So if maybe somebody wants to sell their USDC for Ether or vice versa, they would tap into your pool. And every single time somebody places a transaction, you receive a fee. And that fee is in proportion to how much ownership you have of the overall pool. So if you own 1% of that pool, you would get 1% of the fees. Is that right?
Yeah, exactly. I think the way you can almost think about it is as if you literally had pools or glasses of liquid, whatever, some buckets here. And
Yeah.
if in one bucket we have Ethereum, in the other bucket we have US dollar, someone comes to the exchange, they want to buy Ethereum. Well, they're effectively selling dollars. So they're putting dollars into one bucket, and that bucket is filling up with more dollars. They're taking Ethereum out of the other bucket. Those two buckets make up your pool. That's the initial liquidity that you provided. And so when you come to the exchange and you provide liquidity, you typically set it up so that in each bucket, you have 50% of your working capital, let's call it. So if I have $10,000 and $5,000 of it is in ETH, so I have $5,000 worth of ETH, and I have $5,000 worth of USDC stablecoin, that's my $10,000 pool split 50-50 between the two. If someone comes in and they want to buy ETH, well, they're going to be removing some of the ETH from that pool or from that bucket and putting USDC in the other US dollar bucket. So the amount is going to change. And the price, as you had referenced the constant product model, the formula, the price is going to change based on the amounts in that pool. It's going to automatically rebalance. This is an automated market maker that facilitates this. And so when that happens at the exchange level, in my local pool, we'll call it, the amount of ETH that I started with is going to decrease, and the amount of USDC is going to increase. So I'm going to go from, let's say, 50-50 to 48% ETH, maybe after this trade, and 52% USDC, just depending on how big the trade is, how frequently this is happening, all of these variables that go into it. But the amounts that I started with are going to change. And I can show you how this works too, if you want to just take a look at it.
I'd love to see that.
Okay.
Sure.
Yeah, let me jump up here and share the screen. And this is a pool that I've been running for a couple days now. We're going to do a lot more around this and show everybody how to set these up. But you can see that I'm connected to the Uniswap application. And to do that, you simply just have to connect your wallet. But if I just jump over here to uniswap.org, this is the website. You click launch app. And because I'm connected already, it's going to automatically do that. But I'm running a pool here that I've been running for a couple of days. If I go over to my pools, I can click on this and I get more information about it. So I can talk you through what we're looking at, how this works, and maybe that helps to connect the dots around DeFi and, why I at least think this is interesting. I think it's pretty cool. So here's what this looks like in terms of the interface. And this is after the fact, after I've gone in and set this up. We can go through again a video where we show everyone how to do this, but this is after I've done that. I've created the pool. It's been running for a couple days now. Let me walk you through everything that we've got here. So at the top, USDC ETH, that's the pool. Dollars and Ethereum, those are the two assets. The dollars are a stable coin, USDC. And then you can see this is the fee that's charged by the pool that I'm in. This has shifted over time, whereas before, you saw most of the capital or most of the liquidity was being put into pools that had a higher rate. I think it was maybe 30 basis points instead of 5 basis points here. But as more people have started to use decentralized exchange, you've seen higher transaction volumes, maybe smaller transactions, but it's actually been more lucrative to be in the lower fee pool as a liquidity provider, or at least it has been recently, because there's been higher volume. And that's really what you're looking for here, right? At the end of the day, if I'm providing liquidity, it's very similar to being short volatility or a short options premium trade, something similar to like a strangle, where I want a lot of trading activity, but I want it to really be range bound. I don't want to see a massive amount of volatility, though I do want volatility. The same thing that we see when we sell option premium, right? And so that's why I'm in that pool. That's 5 basis points there. But really quickly, as I just go on, a couple other metrics here. This is the total size of the pool, so almost $10,000. You can see what that pool currently is made up of, and this is going to change. It might change as we're looking at it on screen, but you can see that right now it's 61% USDC versus 39% ETH, and you can see how much of each one of those amounts is there. So what this tells me right away is that the price of ETH has gone up since the time I put the pool together, since the time I created this, because I have less ETH. If I started with 50-50 and now I have less ETH and more USDC, that means traders have been coming to the exchange, they've been bidding up ETH. They're buying ETH, they're taking it out of the pool, they're putting USDC in, and the amounts that I have relative to the finite amount that's in there and where we started, that's changed a little bit. But as that happens, we generate fees, and this is probably the most fun. Yes, sir. Sorry.
And Ryan, so USDC and ETH, your initial balance, it's always 1-to-1. So the second this pool started, it was 50% USDC and 50% ETH, right?
That's right. When I set it up, and then within minutes you can see that change, because as soon as you create that pool and you're providing liquidity, you're participating. You're going to start to generate those fees.
Yeah. Okay.
And so here are the fees.
I was gonna say, once you're done with this, we're gonna pop up an image and see. So Ryan has in his pool, he has less ETH than he had when he started. But remember, people are buying ETH, so that means the price of the Ether is going up. So the downside to providing liquidity is, instead of having 1 ETH, he has 8/10 of an ETH, we'll say, right? And so he still gets some capital appreciation, but not as much as he would have had he not partaken in the liquidity pool at all. So when he mentions you want volatility, but not a lot of volatility, I would imagine that's what you're referring to, right?
Yeah, that's exactly right. You can think of it almost as an opportunity cost. It's referred to as impermanent loss, because obviously the price can move around. You can come back in range. But this is very similar to selling, in some ways, selling a call option against stock that you own, where you could generate some yield. The concept is similar, I suppose. You can generate some yield, but there is a scenario where the price of the stock goes up by a lot, and it goes up above that short call strike. And now you've missed out on the further appreciation. You've capped your gains with that short call. A similar setup here, where if I think about, okay, what's the alternative to taking the ETH that I have, cutting it in half so that I have half the amount in ETH, half the amount in dollars, and then providing liquidity? Well, the alternative to doing that is just holding ETH. And if ETH goes up a lot, I'm going to make a lot more money than if I cut half of it out and put it into a liquidity pool. So there is a little bit of an opportunity cost there. But this is really, really interesting. It's compelling. I mean, I think it's a strategy that, it makes sense in some environments and maybe not so much in other environments. But if you find that the price is just chopping sideways, and you're really looking at this as a good time to be short vol almost, you're going to see that this generates quite a bit of fees, assuming that there's a lot of trading activity. And in the last 2 days, given that we have seen a good amount of trading activity with the volatility that's come back into the marketplace, this pool, which has $9,700 in it, has generated 136.82, and has done so passively, right? 24/7. This runs overnight. This is a 24-hour market. And you can see that those fees are going to be made up of both USDC and ETH. So what's interesting to me about this is the almost the volatility in the fees too. If you're bullish Ethereum like I am, and you're trying to acquire more of it, well, you're not being paid in something that's stable. You are getting some of those fees in the stable coin, but you also have the volatility component of ETH. And so your fees can increase as the price of ETH increases, because obviously the value there is going to go up. And so if we were to see ETH, let's just arbitrarily say gets cut in half here today, then obviously the unclaimed fees are going to go down by quite a bit, because that spot 0.3 in ETH there is going to be worth less than it is at these current prices. So there's some kind of hidden risks, I suppose, but maybe what's most important here is that over the last 2 days, this has generated $136, $137 off of 9,700 just by providing liquidity. We can do the analysis.
Brian, that's over the last 2 days, you said?
Yeah, over the last 2 days here. I put this pool together 2 days ago.
That's extraordinary, because it's similar to options like the straddle or the covered call. I would compare it to a covered call, because once it's almost like getting called out, right? Once ETH goes up far enough, you're no longer going to have ETH in your pool. It's going to be just all USDC. It's like options trading, but there's really not, because of that constant market maker formula, there's no real principal risk here. Am I right in saying that? That if you put 10,000 in,
there is a lot of principal risk, actually. So let me explain that really quickly, and I'll just move down the page here so we can see the range, because I think this helps to illustrate the concept, and really gets us back to if you're familiar with selling premium and trading options, being short options, some of the strategies there, such as a strangle, it's kind of what we have here. So this is the range that I'm providing liquidity in with the amount of money here that's in that pool. So the $9,700 is going to provide liquidity, is going to be active. It'll be alive, in a sense, as long as the underlying price of Ethereum is between 1675 on the downside and almost 1875, 1876 on the upside.
Okay.
Right now, the current price is 1795. Let's talk about two different scenarios then. First, the one that we were discussing earlier, where the price goes up. Where's your risk? Well, if the price continues to climb, meaning traders are coming to the exchange, they're buying Ethereum, they're taking it out of my pool within this range that the pool has been set up around, and they're putting in USDC, I'm going to have less and less and less Ethereum and more USDC as that price climbs. Eventually, if the price goes to 1900, goes to 2000, I'm not going to have any Ethereum in the pool, only USDC. USDC isn't going to change in value. But as Ethereum goes up, I'm going to miss out on those potential gains in this situation, because I've sold out of essentially all of the Ethereum in the pool. Now, if the price falls back within range, that means traders are coming to the exchange. People are putting Ethereum into the pool if they're selling it, and they're taking USDC out. So I might get some USDC back, as I'm kind of automatically buying it back as part of this process, but that's only within that range. An Ethereum price above 1876, I'll get an indication on the interface here. I'm out of range. I'm no longer providing liquidity. I either have to pull my liquidity, rebalance, and create a new pool, or wait until the price comes back within range for this to be active again. And I will miss out on any further gains. Price explodes to 3,000 from here, I miss out on all of it unless I rebalance that pool. So that's the upside risk. Really quickly, downside risk. This is no different underneath 1675 than if I just had 100% Ethereum. So it's the opposite scenario from what I just described. You have traders coming to the exchange. They're putting ETH in the bucket. They're taking USDC out. I have more and more Ethereum as the price drops. I'm selling out of dollars. I'm buying Ethereum, if you think about the trade that way. Underneath 1675, pool is 100% Ethereum. And if Ethereum goes to zero, I lose everything.
Okay, very interesting.
And you can do this with, with the tastycrypto wallet. You can use Wallet Connect. You can connect to a variety of different decentralized applications, Uniswap being one of them. We've got a ton more content that we're going to create around how to set these pools up, how to manage risk, how to think about this, when the right environment for doing this is, so on and so forth. But this is a DeFi activity that I'm pretty sure today, well, people have heard about it in some capacity. There's just not a ton of participation. If I throw the screen back up here, here's another cool thing about this. You can go to the Uniswap website, go to the app, and you can open up the analytics tab. And so you can have a sense of what's happening on this protocol. And most protocols are going to have some sort of analytics tab that'll give you some more information about what's going on. But what we can see here is the total value locked. You can think about that as the total value of all the crypto that's being staked or the liquidity that's being provided across the entire protocol, across all pools, is just under 3 billion. If we look at where this was throughout history, we've definitely seen larger amounts, over 3 billion here back in August of 22, but it's been pretty stable. So even though we faced a lot of headwinds in the industry and in the market, this is something that's been relatively stable, and still growing in many cases. You can see the volume over the last 24 hours across the protocol. So think about it as across the entire exchange. And let me just get this off the screen. And then you can see, more information about just where those prices are, what's been trading, what the volume for each of these tokens is. You can see the top two coins there, Ether and USDC. And you can see the fees that have been generated across the protocol as well. So I suppose the way to think about this was, if you were providing every penny of liquidity across the entire protocol, what is the amount of money that you would have made over the last 24 hours as a result of that in the form of fees? And you can see it's going to be about 1.2 million there. And over the last 24 hours, as we've seen trading activity increase, the fees that are being paid out on that daily basis, that's up about 10%. So these things can move around quite a bit. I've seen this at points in time where, it feels as if it's too good to be true in terms of the fees that you're generating. I've also experienced points in time over the last couple of years of doing this where it's deader than dead. You're wondering if it's working because you're just not seeing a lot of activity. You're not seeing a lot of trading. You're not generating a lot of fees. So there's the good times, there's the bad times, but this is how you look at this.
So I want to touch a little bit more on the revenue that you're making, but I would also like to learn a little bit more about the revenue that Uniswap is making on this. From my experience in cryptocurrency, I'd say about 97% of coins are just shit coins, and they don't really have an economic feasible model to make money. But Ryan, could you go to DeFi Yama, and could we take a look at the revenue that Uniswap is actually making? So if you were to buy the Uni token, which is the native currency for this protocol, you could partake in some of this revenue sharing, right?
Not yet. It's an interesting point that you bring up, Mike, but right now the token does not generate any yield. There's no dividend or anything like that in a sense like you might see with a company with a share of stock where you're receiving some portion of the profits or some share of the revenue. The only way to generate the yield here through these fees, through this structure, is by providing liquidity and participating at that level. But a lot of people have, been waiting for the fee switch to be turned on so that, in theory, holders of the Uni token would receive some portion of those fees. That's not something that's in place today. It's definitely something that people have discussed. But if I just go, and this is a great website too for anybody that might be new to how you can look at some of this stuff. I haven't been on here in a while, but I think if I find the categories and we can look at decentralized exchange, and this is also a great overview of, where is the money at in DeFi? We're going to run out of time here today, but we'll talk about liquid staking. We'll talk about lending. Number 3 here is DEXs. And there's 11 billion, almost 11.5 billion here staked in decentralized exchanges. Uniswap's number 1. It's deployed on 10 chains. And it's just number 1 in terms of how I have it sorted here by total volume or total value locked, excuse me. So the data that we have across all the chains, and the difference between this number and what we were looking at before was I was only looking at it on the Ethereum blockchain, the Ethereum network, which is really where the lion's share of the activity is. But here you can see that TVL across all 10 chains is going to be an aggregate 3.3 billion. So a bit more there. And if we click on this, it should give us a sense of, and I don't know how they break down fees and revenue in that sense here, but let me get TVL off of here, see if they're pretty much okay. It might be categorized as the same thing.
I don't see, like you said, I don't see any revenue. Maybe that's because they haven't turned that on like some other protocols have, where they're just giving it all back, right? But if they were to if they were to retain a small percentage of the fees earned, that could go to the coin, right?
Yeah,
Theoretically
there's
speaking.
I think there's a path for that. Again, that doesn't exist today, but I suppose if you just looked at this as a company, or if the only way to receive the fees was to own the token, it could work that way. But then if that was the case, there would be no incentive to provide liquidity if you weren't sharing in those fees. But if you just think about this as an entity, how much money or what fees, what revenue has been generated by this protocol? I think it was one of the first DeFi protocols to generate over $1 billion in revenue or in fees. So again, it's real, and you can see that it fluctuates quite a bit, but there have been some pretty big days here, and I think the most recent one this year, if we go back to March, if you recall, this is when USDC depegged from the dollar for a second. I think there was about a 10% difference from where it was trading on various exchanges. We had the banking crisis here with the regional banks in the US. And so you saw a ton of activity in crypto at that point in time. And that was a pretty big day recently for Uniswap, at least over the last year. You can see fees of closer to 3 million compared to what we looked at just a little while
Wow.
ago. So yeah, that's Uniswap, man. That's
Yeah.
a little bit of a primer on decentralized exchange and really providing liquidity to the exchange. Which again, I don't know how many times I've said it, but this was my gateway drug, and happy to dive into this more on a future episode.
Yeah, I'd like to dive more into the tokenomics of these things more as well. Like I'm just looking at Aave on DeFi Yama, and you can see their revenue. Like back in 2021, this the Aave protocol, which is a lending protocol, was making, sometimes $500,000 a day. That's
Yeah.
down to maybe 60 to $70,000 a day now. But it's just there's so much noise in the space, and we don't talk about why would you invest in these things. They're just speculative assets at this point, in most people's minds. But there are some real things going on. Some of these protocols are making a lot of money, and I think that's very interesting. And I don't think too many people go to DeFi Yama and look at the revenue or the TVL before they invest in a coin because they don't know it exists. And there are a lot of really great tools out there to kind of research crypto. Hopefully in the future, we can do an episode just on those tools, the things that me and you use every day. Yeah, there's a lot of stuff out there, a lot of noise in crypto, but there's also a lot of really cool protocols and a lot of great places for free research to see what's going on. So
Yeah. Well, I'm excited to dig into it with you. We've got 2 minutes left on our free version of Zoom. So we've got to cut this one. But yeah, we're going to take a look at all of that. So if you made it this far through the video, subscribe to the channel. We've got a ton of content coming out, trying to get some things up here on really a weekly basis, multiple times a week. And hopefully we're able to showcase more of what we find interesting, exciting, the ways that we're participating, once in a while, making some money in DeFi, on-chain opportunities. That's what we're trying to do with Tasty Crypto. It's a complement to the Tasty Trade brokerage offering. We've got a lot that we've been focused on there as well. Some really positive, some great changes that are coming here soon. So stay tuned, subscribe to the channel, like the video, follow us on Twitter at Tasty Crypto, follow Mad Mike, and we'll be back soon. Until then, I'm Ryan Grace.
I'm Mad Mike. Thanks for tuning in.
Peace.